Okay, very good. Thank you very much, everyone, for being here this morning. My name is Mark Dakota. I'm the town manager in Waterville Valley and chairman of the Coalition Communities 2.0 group. I would like to welcome, I guess we have attendees who will be joining us via Zoom here in a minute. I'd like to begin by going around the room, having folks introduce themselves, the community that you represent. And we'll start over here.
Bill Markison with the town of Tuftonboro.
All right.
Barney Maroney, town of Carroll.
All right.
Sean Mulholland, City of Limerick.
So I know you're there.
Terry Murphy, Selectman, Bridgewater.
Jade Perini, City Portsmouth.
And we have members of Bernstein Shore here as well.
Good morning, Kathy Fox.
Jim Merrill.
Teresa Rosenberger.
All right. And I'm not seeing anyone up on the screen.
Yeah, they're in there. Just confirm. They can hear us. I know that.
If you like to see and hear them, I do need to make them panelists instead of attendees. Do you want me to promote every single person?
I would,
Yeah.
let's see who's there for.
Okay, I am promoting the 6 people that are in the attendees to panelists. And they just need to enable their video for you to see them.
All right, good. Well, we have 6 folks up there. If you could go around, Dave McGuckin, if you could please begin and just introduce yourself and the communities you're representing.
Thank you, Mark. Yeah, good morning. Dave McGuckin, Selectman, Town of Newcastle.
Michael? I could go ahead while Mike gets unmuted.
Becky Bergeron, Town of Rye.
Michael?
Michael Capone, Town Administrator in Holderness.
Richard?
Rich James, Selectman, Town of Hebron.
And Lori?
Thank you.
You are mute. You are still muted.
Laurie Schmidt, Town of Hollis.
Okay, very good. All right. Again, thank you everyone for being here. We're going to move directly to our presentations. We do have representatives from the Department of Education and Department of Revenue Administration here to provide us with an update on recent decisions with the state budget and how they potentially impact education funding, and then we can have a discussion, maybe provide some questions for you after your presentation. So I'll turn it over to you.
Hello, everyone. I'm Mark Manganello. I'm with the Department of Education. I'm the administrator of the Office of School Finance. And with me, I have Bruce with the Department of Revenue Administration. And the reason why Bruce is here is I'm going to be doing most of the talking because we're talking about education funding. But I have Bruce with here because sometimes you'll notice DOE education funding policy will kind of interact with tax policy. So that's why we have DRA here with us. So you shouldn't have gotten the handout. I think.
No, we got one.
It's a 5-page PDF. And so I just want to, talking with Teresa. Teresa invited us. Thank you for inviting us.
Thank you for coming.
One of the when you first look at this budget and you see a SWEP reduction, one of your first reaction could be, okay, how does that work? How does that impact my community? And you might be concerned it's going to impact school funding negatively, especially for excess SWEP towns. And I just want to say, if you get lost in the presentation, if you can't follow along or if I mess it up, the SWEP reduction will have no impact on school funding. It is a tax cut. So that's the big takeaway from this presentation. It is a tax cut. It has no impact on school funding. We'll go through how that works exactly, but I just want you to know that's the big takeaway. So if I can back up a little bit, the first page you see here is the ETF, the Education Trust Fund revenue, and it's for fiscal year 2022, because that's the latest CAFR audited financials we have. So if we're going to back up even further and look at a high level, how do we fund our district public schools, K through 12? We spend about $3.3 billion. $2 billion is for the local education property tax, approximately, rounding by 100 million or so. And then 1 billion is state aid. And then 150 million or so is federal money, 150 million or so is just miscellaneous revenue schools collect. So we're talking about state aid, which is about $1 billion. And what's funding that state aid to schools is coming from the Education Trust Fund. So if you look at this pie chart, what's in the Education Trust Fund? Well, there's a little bit of business profits tax, there's a little bit of business enterprise tax. Some of those taxes are going to the general fund, some of it's going to the Education Trust Fund to fund state aid. But the most important one here, we're here to talk about today, is it's the biggest slice of the pie, is the statewide education property tax. And as you can see there, the statewide education property tax raises $363 million, which represents about 37% of that $1 billion in state aid. And the statewide education property tax can really trip people up because you want to think of it as state revenue, but you also want to think about it as a state grant. And that's where people get a little tripped up on it. But if you looked at state fiscal year 2023, we are reducing the SWEPT by 100 million. So the way the SWEPT currently works is we have to raise 363 million, and we have to look at all the property values in the state. So we have to raise 363 million, there's $200 billion in property. So we have to have a tax rate of about $1.82 per thousand. So relatively speaking, for a lot of taxes, that's a really pretty low tax rate because it's easy to raise 363 million over $200 billion in property values. So if we're looking at that tax rate approximately statewide, if we reduce the amount we need to raise through SWEPT, we do a $100 million cut in SWEPT. If we only need to raise 263 million over $200 billion property values, as you can see, that tax rate is going to drop to about $1.30 per thousand. So that's what the SWEPT tax cut's doing, is the SWEPT has to do something. It has to raise 363 million. In state fiscal year 2023, it's only going to raise 263 million, and that's going to result in a tax cut for your SWEPT. So the $1 billion in ETF money that comes in, about 95% of it is going out towards state adequacy. So that's how we mostly fund our schools, is through state adequacy formula. So if you go to the second page, and if you look at the top left corner, we have base adequacy aid. So the way the adequacy formula works is first we have to determine what is the cost of your adequate education. So that is our constitutional obligation to fund inadequate education. We have to make that calculation first. So if you start in that top left corner, you're going to see base adequacy aid. And if you follow that row through, it makes a calculation. So basically, we're looking at the pupil in your school district. And we are taking that pupil. If you serve that pupil, doesn't matter if they showed up to class or not, if you were responsible for serving that pupil, we are towards calculating your cost of inadequate education. We are going to say that pupil is worth $3,786.66. And yeah, it doesn't matter if they show up or not. It's based on their membership, what school they belong to. Then we're going to look at that pupil and we're going to see, well, are there any other characteristics about that pupil that would add towards the cost of the adequate education? And that's the next row, the next couple rows, which is differentiated aid. And so if that pupil is in poverty and 180% of the federal poverty income guidelines, then they are eligible for free and reduced price meal program. That's a federal program. If they're eligible for that program, then we will add the $3,786, but we will also add $1,893 towards the cost of inadequate education. And then we'll continue this process. If that student is also receiving SPED services, we will add $2,000.37 towards the cost of inadequate education. And then we'll keep going. If that student is an English language learner, we'll add $740.87. And then lastly, if the student is not FNR eligible, not receiving SPED services, not an English language learner, and they scored below proficient on the 3rd grade reading test, we will add $740. So not a lot of students meet that criteria, but a lot of students meet the FNR criteria, the free and reduced price meal eligible criteria, and every student meets the base adequacy criteria. So if we do all those calculations, Yep.
Just to clarify, the first three categories are not mutually exclusive. The final one is.
Correct.
Okay.
So if we add up all those calculations, the base, the differentiated aid, all the different categories, we determine your cost of an adequate education. And that's how the state defines adequate education. So this is where the next step is to deal with the SWEP, and this is where things can get a little tricky. And this is where we have communities that are excess SWEP and communities that are not excess SWEP. So if I added up all those for your community, and I got $1 million was your cost of an adequate education, and then I looked about what did your community raise for SWEP? And if your community only raised $500,000 for SWEP, well, your cost of an adequate education is $1 million. You have $500,000 in SWEP, so I need to pay you $500,000 so that you have enough funding to provide an adequate education. So that's how most communities work. The way excess SWEP communities work, which I think is a lot of the communities in this room, if not all, the cost of an adequate education is $1 million, and say you raised $2 million in your SWEP. Now you have $1 million more in money than the cost of an adequate education. And the way it used to work back when we had donor towns was the state would take that $1 million. And you'd say, okay, you have $1 million to provide your adequate education. You raised $2 million through SWEP. The state is going to take that extra $1 million and use it to fund other state aid adequacy grants. So that doesn't happen anymore. Whatever you raise through your SWEP, you keep, you raise it, you retain it. It never enters the state bank account. So that's what we call excess SWEP and what used to be called donor towns. So then lastly, the last section is after we've done that calculation, is there some other additional grants? And by the way, I'm looking at state fiscal year 2023, not 22. We have a lot going on in 23. So we have a bunch of additional grants that will be added to the formula. A lot of excess SWEP communities are not going to be eligible for these grants. So the one that you've probably heard before is stabilization. That's existed since 2012. And the way stabilization grants work is if you're an excess SWEP community, you're not eligible for stabilization. So that's not going to be applicable. A new grant is called this EFA phase out grant. It's if your community lost funding because a student left your district and joined an education freedom account, and that harmed your community financially, then you're going to receive a grant for that, and it's described there. It's 50% of the cost you would have received otherwise. But that's not going to apply to excess SWEP communities, because if you think about excess SWEP communities, you're not being funded for your cost of an adequate education. You're being funded by SWEP alone. So you're not going to be harmed financially if a kid leaves your district because you've already raised more above and beyond the cost of an adequate education. And EFAs are driven by adequacy. So a little bit complicated, but that's not going to impact excess SWEP communities. The next grant is new in 22, and it's called the Relief Aid Grant. And it's based on the percentage of FNR students in your district. And then there's a certain sliding scale grant that you become eligible if your FNR percentage, your poverty percentage is 12%. And so the way that grant works is it's going to be added on after we do that calculation, the SWEP subtraction, and we determine what your relief aid grant might be. But the reason why not a lot of excess SWEP communities are not going to be, it's not going to be applicable to them is because a lot of excess SWEP communities don't have high poverty percentages to begin with. So the grant, and if they do have high poverty percentages, it might be a really small grant. So in order for you to be eligible for the relief aid grant, this gets a little complicated. The difference between your adequacy and your SWEP needs to be less than whatever the relief grant calculation could be. So your relief aid grant needs to be higher than that excess SWEP in order for you to be eligible for it, because we're doing adequacy minus SWEP plus relief aid grant. So a lot of communities are not going to be eligible for that. A lot of excess SWEP communities are not going to be eligible for that grant. Then lastly, the one that's most important to all of you, the excess SWEP communities, that is the SWEP reduction hold harmless. So I'm going to go into further detail explaining exactly what that is, but basically what you would have received otherwise if the SWEP was 363 million raised statewide. After we cut it, if you have a reduction in your SWEP, which excess SWEP communities will, we are going to fund to ensure you that you're held harmless and that you lose no state funding. I'm going to explain that in the other documents because it can get a little tricky. Next page. So this is the language in HB2. So the first paragraph there is the SWEP reduction. So if you see underlined, it says for that year, for fiscal year 23, we're raising 263 million. So that's where the swept reduction takes place. Normally, we're raising 363 million. So that is where the swept reduction occurs in HB2. And then where the swept hold harmless occurs is in the next section.
I have a question.
Yep.
So reading this in 2024, it goes back to the 360.
That's correct. That's important to point out. This is an RSA. This is chapter law. So what that means is it's just going to be 2023 under current law, unless the legislature does something to extend it beyond 2023.
So it's one time only right now.
Correct.
One time only. 1 year only.
And from a DRA perspective, that'll be reflected in the 23 tax rate.
That's correct. The reversion back, you mean?
Yeah. Or no, the 23 tax rate for the reduction. Or will it be this October?
Not this year, it'll be the fall of 2022.
Okay,
If you want me to
Yes.
digress for a second. We will be providing the OE with the swept for use as of April 1st, 2022. For their estimating purposes during the fall. And then that swept rate will generate the array of tax dollars required that you will see on the tax rates in the fall of 2022.
22, okay.
In other words, all fiscal years referenced in the bill are fiscal years ending in 2023.
Yeah.
Yeah,
Right.
okay. Tax rate October.
So that's the language in HB2. There's a swept reduction and a swept hold harmless. So this is where the swept can get a little technical. So I'm going to try to, and then when people talk about swept, from the state's perspective, my perspective, it's a state tax. We raise the revenue, we let you keep it. From the school district's perspective, you guys kind of understand, well, the state controls this tax. We don't have control over this tax. And from the taxpayer's perspective, it's a little different because from the taxpayer's perspective, it all goes into the same spot. I'm paying my municipal tax collector. And if you know the money never goes to a state bank account, it's just going to the school district. It doesn't really feel like a state tax from the local level. Because when you talk about the swept, we're raising it. It never comes into a state bank account. We record that as state revenue, and then we also record it as a state grant. But the money never came into a state bank account, and we never redistributed the money. You raise exactly what, you retain exactly what you raised. So if you've ever looked at LBA fiscal notes that deal with swept reductions, that's how it's reflected, and it's just sometimes a little difficult to wrap your head around. So let's look at the swept reduction, and let's pretend adequacy doesn't exist, and let's pretend that HB2 hold harmless doesn't exist. If we are going to raise 360 million through the swept, well, then we're going to spend 363 million through the swept because we spend what we raise. If we're going to reduce the swept by 100 million, we're also going to reduce expenditures by 100 million. So the net impact is 0. But that's the state's perspective. If you look at the local perspective, you were receiving 363 million in revenue. Then we just cut it by 100 million. So now you're only receiving 263 million in local revenue through a swept grant. So if we didn't have adequacy and we didn't have the HB2 hold harmless, what would happen holding all things equal? You would either have to cut your school funding or shift that swept tax cut to the local education property tax. So that's effectively what would happen if adequacy didn't exist and if that language in HB2 didn't exist. So now let's run it through. Well, let's say adequacy does exist, which it does. And let's say that HB2 language that does the swept hold harmless exist, which it does. Let's look at state fiscal year 23. That's the table at the bottom. Let's reduce swept by 100 million. Okay, we'll reduce expenditures by 100 million. So the net impact of the state is still 0. But now if you remember the way the formula works, is if your cost of an adequate education is $1 million and your swept is 500,000, I need to pay you 500,000. I need to pay you so you have your cost of an adequate education. Same goes if I reduce the swept. If your cost of an adequate education is $1 million and the swept was 500,000, but I've reduced it down to 250,000, I need to pay you 750,000. So I need to pay you 250,000 more when you cut swept. So that's just the way adequacy works. I have to fund an adequate education. That's the way the law works. So the way you run the formula, you run the swept reduction through the formula. Basically, 85 million is going out through adequacy. So it's I have to provide an adequate, I have to fund an adequate education. So $85 million is making up for that $100 million reduction. But $15 million is the swept hold harmless. So if you were receiving, your cost in adequate education was $1 million, your swept was 4 million. You're used to receiving 4 million because you raise and retain your swept. But now we've reduced swept. So now if your swept is only 3 million, you've had a funding cut because you did have 4 million before. Now you only have 3 million. So what I'm going to do from the state is pay out an extra $1 million so that you're back to $4 million where you were otherwise. And so that represents $15 million in grants. So the net impact of the state, well, the state just spent $100 million. We were net impact 0, but we just paid 85 million in adequacy and 15 million approximately in these swept hold harmless grants. So now the state has spent $100 million, but let's look at the local perspective. When we started this out, your revenues were down 100 million. But I just funded you 85 million in adequacy and 15 million in hold harmless grants. So now your 0 impact to your school funding, your budget, your revenue in your budget is 0. So essentially the $100 million was all spent to hold you harmless, to hold your school funding level and just reduce the swept. So effectively it's a tax cut. It has no impact on school funding. That's how it works. So just to go through the scenarios, there's there's 3 main scenarios happening.
Yeah, I asked another question.
Yep.
Yeah, I've listened to him, and I've read them, and I'm still a little confused. So on your reduction, the one you just went out, bottom line, state cut $100 million. But in order to have these folks held harmless, they're gonna end up spending $100 million.
Correct.
So there was really no cut. Except, as I understand it, there's excess money in the education trust fund.
Okay, we're talking about funding it, because now you're talking about revenue coming in.
Well, yeah, because I'm sitting here looking at this
Yeah.
and going, the state cut these
Yes,
funds, they cut the sweat by $100 million, but the state's gonna keep it hold harmless. So,
right, absolutely.
where's the money coming
So
from?
if we go back to page 1, this is fiscal year 2020 ETF. But Teresa's thinking, well, what is 2023 gonna look like? And actually, I thought about providing that pie chart, but I'd have to talk to other people at DRA that aren't Bruce, because I'd have to know exactly where the revenue is coming in. But I can tell you approximately what is the ETF pie chart going to look like in 2023. And what you're gonna see is, instead of that swept raising 363 million, it's gonna raise 263 million. So its percent of the ETF pie is gonna be closer to 25%, because the swept is working less hard. So what that means is the other taxes need to work harder. So we think as in the state, as in the legislature, when they're estimating how our revenues are doing, they think the business profits taxes are going to perform very well. They think the business enterprise tax are going to perform very well. So the pie chart in 2023 is going to theoretically have a swept that's only doing 25% of the work. It's going to have business profits tax doing 10, 11, 12% of the work of the ETF. Business enterprise taxes will go up as a percentage of the pie. So this is interesting when the governor did his revenue, and I don't really pay attention too much to the revenue estimates, but I think the governor did his estimates. And then the House got it, and the House, I think they thought there was less money. But the House was originally the one who funded this swept tax cut, but they couldn't do it with the education trust fund alone. What they needed to do was have general funds come in, $62 million in general funds come in and fund this. But when the Senate did their revenue numbers, they said, well, we think the education trust fund has enough money that we can reduce the swept by $100 million, and we think these other taxes will perform very well and fund this purely with the education trust fund. So yeah, how you fund things could be, the House, they was thinking they might need general funds, because general fund and education trust funds are separate, but you can move them around. The Senate, and then the budget that we have in law, believes that the education trust fund will fund this tax cut. But that is a very important to point out. And the question I have from other people, just people in general, is, can we afford this the next year? I don't know. Can we afford this in 2024? You know, that's for someone else to figure out. But that's yeah, that is very important to point out. So the last page, I'm just going through the scenarios, and this just sort of explains you on a more granular level how that tax cut is working for you, how that $100 million is going to reduce your tax liability. So Example one is the non-excess swept town. Their cost of an adequate education in district, this is the hypothetical town. It's somewhat loosely based on our real town. 22 million is their cost of an adequate education. Their new swept is 5 million. Well, I gotta fund their cost of an adequate education. So if you follow through, I gotta pay them $17 million. So if I looked at their old swept, it was $7 million. So the way I was funding them previously with no swept reduction is my adequacy grant for them was only 15 million. So I basically increased their adequacy grant by 2 million. And what is the impact to the school? Well, whether I had swept at 363 or if I had swept at 263, they're getting $22 million regardless. So the net impact is zero. But essentially that $2 million was used to cut their swept property tax liability for that community. So that's a $2 million tax cut essentially for that community. For the excess swept town, cost, this is District 2 here. Cost inadequate education is $2 million. The new swept is 4.5. Well, I don't owe them any money through adequacy because they have enough in their swept to fund the cost of inadequate education. So I'm paying them zero. But when I look at their old swept, what would their swept been if it was 363 million that we were raising statewide before we had that cut? Well, their old swept was 6.5 million. So they're going to lose money. It looks like they're losing $2 million. But the HB2 hold harmless swept grant comes in and funds them $2 million. So if we look at the net impact, well, prior to the swept decrease, their swept was 6.5 million. So 2 million was added to the 4.5 million to bring them to the total of 6.5 million, which was needed to hold them harmless. So they're receiving 6.5 million regardless, and essentially $2 million was spent to reduce their swept tax liability. And then the third example, this just shows you an in-between town. Yep.
Just, so the hold harmless grant, how is that getting to the communities?
So it's going to be,
It's gonna be a check?
yes. So yeah, that's a good question because excess swept communities, mostly they're not getting a check from the state because they're raising and retaining it. You have to work with your tax collector. However you do it, you're not getting a check from the state. So now excess swept communities will be getting a check from the state. So that will be something new.
Okay, all right.
Who's getting the check though?
Yeah.
School
The
district?
town or the
School districts. That's right. And this is a quirk within adequacy is we calculate it at the municipal level. So we're calculating how you're going to be funded at the municipal level, but we are paying the school district.
And does the municipal know how much you're paying the school?
It's all on the website, so it's all transparent.
So then the impact to the community may be different than what the state has calculated and given the school district. Right? So multi-community school district
Yep.
has a funding model that includes several pieces, right? You all are going to calculate for the town of Tuftonboro, X amount is what the grant is going to be, but that didn't come to the town. That goes to the school district.
Mhm.
Okay, the school district is going to apply that against their needs. And if they lump it all together and apply against their needs, that reduces their total revenue requirement from the towns, and then apply the standard formula, the money isn't necessarily going to track through. See what I'm saying?
So there is some scenarios where cooperative school districts need to figure out how they want to deal with the money. They have,
Oh, well, right, the
Yeah.
school district figures out how to do it. All I'm saying is that for the town of Tuftonboro, X amount of money that is calculated isn't necessarily going to get applied to the town. That's up to the school district.
so yeah, this is based on, so Tuftonboro, yeah, this gets into the local, it's the local education, it's determining their local education tax, which is not their municipal tax. There's a different taxing jurisdiction, which is the
Yes,
school
that's
board.
Right.
But we're calculating what is owed by the municipality, and for like regional school district, it's just getting rolled up. So
I think the point, though, is unless the state mandates that roll up is exactly as it was allocated to the community,
It's going to get.
it's going to
allocated
get
differently.
allocated differently based on, use the one that I'm most familiar with, the Exeter Cooperative School District.
yes,
It's going to be calculated on FTE and valuations, 50/50. So that calculation could result in a different credit to each community than what was allocated to them through the funding
And anticipated by the
methodology.
legislature, the way they wrote the funding law.
Yeah, so I think you point out, that's correct. It could be different. So that's for the local, for the Exeter Regional Cooperative. They need to figure out how they want to deal with revenue coming in. So that would be a local control issue. The state's gonna calculate adequacy, pay it out to the school district, but yeah, there could be some fight over revenue. Hey, what's my portion? What's your portion? There's some room there for the locals.
I don't think there is room.
No.
The cooperative district's gonna fall back on their cooperative agreements.
Yes,
And their cooperative agreements are gonna define, like they divide out all other revenues.
Unless there's direction that says it has to be applied after the funding is divided up. In other words, the formula determines what each community's funding level is.
Mhm.
And as you indicate, it's based upon property values and school population. They're different in different districts, but unless the offset is applied after the funding level from the community is determined, then it will be skewed.
I don't know if, so the thing, there's a moment where the state ends and the local begins.
Yeah.
And I think we're getting very close to that line. And I don't know exactly where we're at with that line, but I know that to some degree, there's local control. So the state makes the calculation. If you are part of a cooperative and you don't like the way that cooperative is working, there is some local control there in a sense that you can try to change the agreement. So, but I don't know if I exactly follow. Maybe we can talk offline about it.
Yep.
Where there might be some fuzzy, where the handoff might be a little fuzzy.
The only local control, I think it's only, no, it's not, but it's only probably Portsmouth, because they have a dependent school district.
Well, yeah, we're a single town school district as well.
Okay.
Yeah.
And there are
So-
other
But you had no, there's a
Well,
separate
and-
taxing
and-
district.
But that's right, but that's my question is the swept,
Mhm.
what we collect through that portion of the tax rate comes into the tax collector and then we get a list, a monthly payment schedule from the school district that we have to pay. Unless this law says that the school district has to reduce those monthly payments by an amount that is equal to that, you're gonna send this hold harmless grant to
Oh, I see what
them,
you're saying.
It
right?
won't be
No,
truly
And
hold
and
harmless.
they won't have, and they won't be holding us harmless from it. So
So
there
you're,
won't be a real reduction unless the school district has been told that they have to reduce that schedule by that amount.
that schedule you're describing, I believe will be reduced. But then you'll be getting, your school district will be getting a check to represent the hold harmless. So at the end, the final state revenue that comes in will be held harmless, but you're right, the way it comes in is gonna look different.
Well, I hope that the school, I mean, I hope that when the school gets that check, then that will be taken into account when the tax rate is set, so that our local portion will go down or something. Because,
I hadn't discussed with Mark.
yeah,
But I think right now I would have envisioned that along with all of the other calculations that go into from DRA's perspective is one number, which we need by October 1st.
Right.
Which says, okay, for this school district, we know what the swept amount is.
Yeah.
The DOE has worked through many calculations,
Yeah.
all of the things you're familiar with.
Yeah.
And says to DRA, for that school district, please plug in this number. The state is supplying this district with this number.
okay,
If that number is going to include the hold harmless amount for calculation purposes, maybe not for actual trend, sending of the funds, but we're gonna know that district has this and this and this, all adding up to what we would think of as the grant number.
Yeah.
And it's also going to include new column, hold harmless amount. That total
Okay.
then plugs into the district's calculations, thus lowering the total
Right.
taxes due, which then translates into your payments schedule.
okay. As long as it's taken into account
Right.
on the revenue side, so So if you're gonna send it directly to, I mean,
Sure.
this is a different issue than
It's
what
different
you're
than our
talking
issue,
about
right?
because of the agreements and.
Right.
Well,
cooperative
what you're talking
agreements.
about is top level, just like we do in a town. You got all these revenue streams.
Yeah.
And you have expense. And the difference basically is what you make up in property taxes. So what we collect in things other than property tax goes to reducing what we have to charge in property taxes. But all that gets applied at the top level before we get to setting the tax rate. So if we do that with a cooperative school district at the top level, the total amount they have to collect from taxes is going to go down. Then they apply their formula, okay? So it trickles down to the individual tax-paying communities at a different rate than what the state has provided it based upon the,
Unless,
Yeah.
DOE provides two schedules to you, one for each individual town as to the calculation of the adequacy. And then they have a schedule for all the cooperative school districts. If that whole harmless amount is calculated within the cooperative school district allocation, then it will be appropriately applied town by town. If it's just written as a big check to the school districts, then it's going to be allocated differently. So I think it's important that DOE knows that the whole harmless has to be in that cooperative schedule.
Yeah, I think, so the way it's gonna come out is you receive two checks from the state, your SWEP check, which is different. The accounting unit is only split up two ways for adequacy. It's either adequacy, which is gonna be these new checks that excess SWEP towns have never received before. And then it's going to be swept. So yeah, I think I do need to think through what you're describing. Because some of it is, I do believe some of it is local control, because if you wanted to have a cooperative agreement, and I don't know, actually, I know the state, when you do cooperative agreements, they say you can do X, Y, Z, or some other formula. You could maybe get into a cooperative agreement where you divvy up the revenue before it comes in. I haven't studied all the, I've only been with the DOE for less than a year, so I have to study all the cooperative agreements and figure out how that works. But there might be an opportunity for you to, when you're coming in, getting into a cooperative agreement, say, before that revenue comes in, don't just apply it. We're actually gonna split that up. So I don't know if there's an opportunity for that.
so.
In a 2-year period.
Right.
So you have to amend a cooperative agreement. It usually takes 2 years.
Yes, yes, you're not, by 2023, you're probably not gonna get
So
that.
we're not talking about a new agreement here. These agreements are in place and been in place for many, many years.
Yes.
And so the reality is, unless the revenue is presented to the district in a way that
That's split up.
that it has to, that is very obvious as to where it should go, then it's really at the discretion of the cooperative school district to apply it in whatever way they want.
And that's why that you might not let.
According to the terms of the agreement.
Yes.
Right. Well, yeah, that's right. That's right. So if you apply it above the line or below the line, really, but my guess is that you generally have some discretion as to where you want to apply it, unless the state gives it in a way that says this is where it has to go.
So what the state will be doing is paying, it will come into two forms. It'll just be one big check essentially, but it'll be this check from the state and then the check you got from your municipal tax collector. So those are the two forms we have in law. We can't, but we will have a full accounting of it in the spreadsheet. So if a cooperative school district wants to go, hey, look at this hold harmless, look at my community, I'm gonna do the math and say, you're gonna be stealing some of my revenue, if that's how the local dispute's going. You can make that determination at the local level, but what the state is going to do is it is going to be a check. It will be transparent. We'll have an Excel, once we have our final numbers or our real numbers, we'll have an Excel that breaks it down and we'll show you, we'll have a little column that says swept hold harmless. So you'll have to see exactly what's going on. This $15 million will be broken down at the municipal level. So
generally what I see in the budgets, if it's your local account, we have an ADM formula. So it's fairly straightforward. You divide up, you add all your expenses up, reduce your revenues, and then that's broken out by the number of kids that you're responsible for as a percentage. Generally, what you would see is a local revenue within the SWEP amount or excess SWEP amount. then that would be, if you total those two together, that's your total amount that you owe currently at the same time. The way that this money is coming back to the school districts, if you do it that way, you're gonna turn around and put a check for $2 million in there. And then that's gonna turn out and be divided by the percentages that you have in terms of schools. You're actually subsidizing or pushing that money out to other municipalities inadvertently, I think. So the only way to solve that is to turn around and say, not to send out, if you're gonna send a $2 million check out for the whole harmless, it's gotta be designated as to which town gets what. Bingo, and then that would take care of the problem, but it's gotta be broken out. If you send a $2 million check to the school district, they're gonna turn around and reduce it, and then send the balance out to all the towns within it, and then whole harmless is gonna
Why,
be spread around.
what was the
applied
thought
specifically
process
to a
of
town.
sending it to the school district? Shouldn't it have been sent to the taxing authority? If you want to give the taxpayers the break, should not each community's taxing authority have gotten that check so that it could be applied to that communities?
So I
And
was,
then whatever the ADM, whatever your agreement says, you just pay your share of the agreement, but your community's tax reduction was provided as a community revenue.
I think you bring up some valid points about what the state is gonna be doing is just following the adequacy law. The adequacy law says the money goes to the school district, we calculate it on a municipal level, we pay the school districts. That's the way the law works.
Yeah, but you put a whole harmless agreement in there based on what the municipality is going to turn around and lose if they turn around and do it the way with this. And so if you're gonna turn around a whole harmless, it's gonna be a whole harmless to the individual communities, not the school district.
Right.
Because the school district's just gonna try and take it off the top, and what's left is gonna be distributed among all the other towns. And by the way, other towns have other grants they get, and we have a column that we show us get 0, 0, 0, 0, 0 for most of our communities. So you spend to an adjacent town $900,000 they shipped it for other grants, and we're not eligible for it, which is fine. But the bottom line is that you really need to look at that money that you're sending back to Old Harmless, what they have to turn around and reduce to each individual town within that district. So some towns will get some towns won't. But if you throw it into the district alone,
Pot of money.
as a pot of money, they're gonna turn around and take the expenses less the revenues less expenses, and then that's gonna be distributed back to the individual towns based on the formula that they've adopted.
So
Okay, and you're never gonna get somebody in these towns to ever turn around and change nowadays, to turn around and change the funding formulas, because that's like turning around and adding a new town to the state. It's not gonna happen.
So if we go back to a different funding component,
Mhm.
right? And we're talking cooperative district, regional district. So in our situation, and I'm sure in yours, we have some communities that have excess SWEP,
Mhm.
and we have some communities that don't. All right, those communities that don't, they get stabilization grant. Am I right?
Correct.
Okay, so does that go to the town or does that go to the school district?
All goes to the school district.
Okay.
So then, in that scenario, so an excess SWEP community is getting an excess SWEP hold harmless, and then a non-excess SWEP community is getting a stabilization grant. All of it's doing
But the
generally,
stabilization grants there now.
yes,
So this is an additional piece. So I guess if the stabilization grant, if it's being received by the school district and applied by the school district,
But it's one of those revenue streams like you talked about.
Right.
Which is really affecting, SWEPT is the same no matter what. It's affecting the local education portion of the tax rate,
that's right.
right? Is that
That's
right,
right.
Bruce?
So I guess if the stabilization grants are only being applied now by the district to those communities that they're being received for, then we can make a stronger case for the fact that the whole harmless is going to be applied to the communities that they're being received for.
Let's let DRA weigh in here as far as an impact on the tax rate.
Ironically, I wanted to weigh in with a caveat.
Okay,
Chapter 198 of the statutes is not my forte.
okay.
I dabble in it, right? But it seems that the legislation points very specifically to 198, part 42, section 42, in terms of the distribution schedule.
Okay,
So my initial somewhat 10,000-foot view here from DRA's perspective is this hold harmless amount is meant to work as the other, I think you referred to them as revenue streams. I've mentioned, in the gigantic spreadsheet that determines this. We see over the years, columns come, columns go, based on the legislation and the need for additional calculation. So that this section of statute may clear up some of the question about how is this amount of money, this hold harmless amount of money, going to alter the number that's going to change the local school rate or the portion thereof for a community that's in a regional or cooperative, which is an associated process, most of which is in Mark's hands and DOE's hands. We obviously see it, and there's some coordination because we need to make sure, we both do, that for Tufton Borough or for somebody in a regional, that the amount of tax dollars to support the local education rate for that town, that district. And again, legislation talks about shall be paid to impacted municipalities pursuant to the distribution schedule. Now, my initial take is, right, these are funds headed directly to a school district, even though it says municipalities. I'm gonna think the statute's going to, and I'm not an expert, if anybody has 19842 handy,
I do.
if it talks about distribution and how the funds are dispersed, if it says it's going directly to the district,
Doesn't. It's a
Doesn't.
municipality. RSA 198.41 shall be distributed to the municipality, which shall appropriate and transfer the grant funds to its dependent school department.
is 19842.
That's better for us.
that's
That's
better.
it.
So as I said, I'm a little out of above my head on this.
I think we'll have to look into it and talk about this again, because I think a lot of, to simply say that it's gonna go to the school district, we really need to understand exactly how that is going to happen. Only because I think most of our communities, if we're in cooperative districts, we may be paying a share, whatever that local formula is, because our property values are probably higher than other communities in the district or whatever.
Right.
The situation, I think that it just needs to be looked at and explained.
Absolutely.
to
Question though for you, you could be the representative school district, right, Mark?
Right,
The adequate, the education grant, how does it arrive? I know how SWEPT arrives. I'm familiar with that from my past experiences.
we don't get an adequacy grant because we're a sweat
Excess
community. We're excess.
Okay.
So we.
My mistake on that.
Well,
one.
and there's a question about excess swept too, because you said something about we're gonna be able to keep all of the excess swept with this hold harmless. Are there not, like, excess swept is still capped at your total school budget, right? So if you're raising through swept more than your entire school budget, you're still sending a check to Concord for an amount.
Is that, to the best of my knowledge, there are no
There are
monies arriving in Concord, not in this will be my 6th year.
So that just goes to the municipal tax rate, like they have a zero
I'd be,
local.
because of the small adequacy amount, I seriously doubt there's a community raising more swept than their total school budget.
Okay,
We have a regional school, and we have the regular school tax, plus we have the SWEP.
yeah,
The SWEP gets added in with what we pay.
no, I
to the
understand that,
school.
but I'm just
Right.
saying,
There's
are there
never any
any
extra.
communities with zero local education tax?
So we don't take swept. It just stays.
It
So
stays,
there
okay,
could be, there could be a small community up north with one kid.
right,
That doesn't have a lot of
James been real
education.
patient.
The other thing that I was asking is, if I'm understanding how this $100,000 is going to be replaced, 85 is an adequacy and 15 is for this whole harmless. Is that correct? 15 million?
Correct.
Okay, my understanding of the current communities that generate excess SWEP, the amount that they generate when we raise 363 million is close to $30 million.
The excess.
The excess,
Yeah.
yes. So my question is, how does that get funded? If the hold harmless is only funded to the extent of 15 million, and we have, when we run the calculations, if it's similar, how does that work out?
I was thinking about that. I don't have an answer for you, but what I can tell you is that what that $15 million represents is the amount of damage being done to excess swept communities. Because it's just where you're having a tax cut of about 33% or something. So we're not getting rid of all of the swept. So some communities are actually they're having their swept reduced, but they still have excess swept. That's actually, there's still some excess swept there. So that's why it's
I
not
see what
30
you're
million.
saying. It's not dollar for dollar match, because even with that lower rate, there is excess.
There is excess swept.
Oh, okay, that's.
So, but the end result is that there's still gonna be, that if you reduce it, there's still an issue associated with how they distribute the whole.
Our former conversation,
the
yes, about how
whole
that.
harmless, and
how
it's
that
gotta be, if it's saying to put it back to the district as a credit to that municipality, then it makes sense. But if it's just gonna go back as a general grant to the school district, they're gonna lower their budgets, and then it's gonna be distributed back to the towns that weren't supposed to get the whole harmless grant.
Correct.
Effectively. So we'll have to look back.
And
Yeah,
that's just, so is the way was being read, it seemed like that if the money, if you're sending $2 million back to the school district as a check to reduce, as an increase in their revenues to reduce the expenses, once it gets distributed, it's being distributed across the formulas that already exist within those cooperative school districts.
It's Mr. Murphy, right?
Right.
Yes. It would, when the stat or the law reads municipality, shall determine if any municipality's total education grant pursuant to RSA 198.41. So is there an understanding that this is saying that any towns don't receive education grants? So the fact that it says municipality.
Well, they get the
yes
education
and
grants
no.
through the school district.
Well, I'm being precise here because it might be key, I don't know, about how this hold harmless grant is going to arrive. If it's meant to be packaged the same way I understand the other parts of the state's funding. It may say municipality, but education grants, correct me if I'm wrong, anybody. Again, DRA doesn't get involved in this, but it would have been my understanding that the education grant, the actual funds do not move through the municipality, through the town treasurer, and then cut a check over to the school district, unlike the SWEPT, which does get collected at the town level, sent to the town treasurer, and it's probably packaged with the local school tax collections. And those are the funds that Mark referred to on a payment schedule, which is an agreement between the district and the municipality in question. So the question is, if adequate education grants flow from the state through the state treasurer directly to a local school district, the question will have to.
I think, just want to point out, because you're thinking, well, I want to have my hold harmless grant. I want my $15 million hold harmless grant. I don't want to share it with the district. I want my share. I want the share that my municipality is owed. And we can look into that, whether we're distributing through school districts. We've been doing it for a very long time, distributing through school districts. If we distribute it to municipality, kind of something what you pointed out, if you had a property rich town and a property poor town, and that property rich town got a hold harmless grant from the SWEPT reduction, a hold harmless grant of 1 million. But what if that property poor town had a stabilization grant? Because we pay 158 million in stabilization grants. What if they had 6 million? So if we pay the municipality, they're now going to get that full, say they had a 6 million stabilization. They're going to get it reduced against them when your property rich town is only going to have $1 million reduced. So it could create, you don't know if you come out ahead or not, but it could create a bunch of shifting if we started paying based on a municipality level. It's just something to think about.
No, I'm not suggesting that it get be paid on a municipality level. I'm saying is if the grant is going back to offset the reduction in SWEPT to that community, then the purpose of it is go to the school district so that when the formula is figured out, there's a credit based back to the town based on what it was supposed to be hold harmless. That's all I'm suggesting is another column. And so rather than turning around, because if you turn around and just put a if you lost $700,000 and because excess SWEPT is reduced, And then if someone says you're gonna be held harmless, okay, I get that idea. I'm not asking for more money. I'm just trying to maintain what we have present. So if you send it to the school district, it has to be that as it goes back. And there's a number of other towns perhaps in the same school district. It has to be earmarked as a separate column as to what that credit would be. That's all I'm suggesting.
I think it needs to be in that separate adequacy grant spreadsheet that is done solely for cooperative school districts. Because it is town by town allocation for that. And when you look at the formula that DOE then validates for the cooperative school district, there's the apportionment for each town. And then their individual adequacy per that other spreadsheet is used as a credit against that to come up with your full assessment. And Nathan Lunny also has his hand up, and being the business administrator over there, he's probably more adept at saying that.
Sorry.
Folks, thank you very much. I please let me disclaim that I worked with one cooperative, that was SAU 16, the Exeter Region Cooperative, and I fully appreciate that there may be differences across the state, but Paul is referencing that spreadsheet, and I would tell you in my 10 years in Exeter, when adequacy grants were received, the revenue was assigned by the state by the Department of Ed in an apportionment formula. The revenues went to the benefit of the specific towns that they were due to. If we received impact fees from your local ordinances, those dollars went to benefit the specific communities. And I respect that under the apportionment formulas or the divvying up of the expenditures, those cooperative agreements can fluctuate year to year, and your costs locally can change based on enrollments, et cetera. But the revenues were always assigned specifically to that community. Again, I'm not speaking for every one of them because I know it's New Hampshire. There could be any number of variations around the state, but in Exeter, I really believe, and I called another BA that worked in Exeter for a number of years and said, can you just confirm for me, we're having this conversation. And I think that Paul has referenced that breakdown of cooperative grant values, if you will. And as long as this is distributed to the school districts and their communities by the adequacy formula, it reasonably ought to appear on that sheet and be broken up and those values given the benefit to those communities that way. But I also wanted to jump in, unless I've missed something, and I'm in Portsmouth and I was in Hampton before this, so I haven't seen an adequacy check in years, but adequacy doesn't come as one single check. It comes 30%, 30%, 20%, 20%. So from a cash flow perspective, some of your schools are still going to be looking to you for support, because if these dollars come, they'll be coming now broken up in those 4 payments over the course of the year, just so everybody's aware of that. And I'll continue to chase some of my colleagues to ask about these cooperative formulas, but the state goes to great lengths to put the breakdown both in the local districts and in the regional cooperative districts on that sheet. And my guess is that the majority of the cooperatives are going to give that benefit to the specific communities that money's due to.
Thank you.
Questions?
So one other question, what census number are you going to be using for the calculation of the adequacy number?
Yep, so in this, we're always a year behind. So the school year that's finishing up, we're gonna get that data, we're gonna process it, we're gonna make sure it's accurate, validate it. That's gonna fund, this is school year ending 21, that's gonna fund 22. And then 22 will be funding 23. That isn't applicable for excess swept towns because you're just getting your swept, so it doesn't come into play. But for those non-excess swept towns, it does come into play, and we have enrollment hold harmless. So in 22, we're gonna look at pre-pandemic numbers and during pandemic numbers and pick the greater of the data set. So those communities are getting about $45 million more than they would have.
Yeah, great, thank you.
So those calculations is off of their pupil count.
Correct.
Because basically on a regional status, we're on an assessed value. We have 58 children and we pay well over $3 million a year to the regional school because of where we are. So we'd only be per student as far as the adjustment on this thing.
So yeah, so on the if there's cooperative agreements, if it's a regional, however you do that, that gets divided up, but we're just talking about calculating adequacy with just pupils. So your municipality has 100 kids. When we calculate adequacy for your municipality, we're counting those 100 kids. It gets rolled up. Yep. Yes.
We talked about the governor had his revenue estimates. The House had their revenue estimates. And the Senate used their revenue estimates. In the committee of conference, whose revenue estimates were finally adopted? And what if they're wrong?
So I was involved, I followed the budget process as it related to education and didn't follow every single step of the way. I believe basically the Senate had the better numbers, so they weren't going to go back and use the House. I think they basically used the Senate numbers, the nicer numbers. But what happens if they're wrong? Well, then it becomes a management issue. So the governor has to look at the revenue coming in, manage cash flow, but has to look at the revenue coming in and go, okay, I don't have enough revenues to.
There was a proviso in one of the, either current statute or in one of the bills, that if the trust fund was missing funds, they had authorization to grab funds from the general fund to fund the deficit.
Absolutely. That
Okay,
adequacy.
so that still exists.
Yes, adequacy is always, if the education trust fund dollars aren't there, adequacy will, the dollars will come from the general fund to the education trust fund to always fund adequacy, including these swept hold harmless. We're always going to be funded. But yeah, not to get too much in the weeds as far as what the.
You never know what happens in the good nerve.
There's also a rainy day fund. There's other, contingencies out there, but yeah.
So, and if I may just make one, I guess I'd call it an obvious observation, and that is that a reduction in taxes is great. And everybody likes a reduction in taxes. We're talking here about, as it's written into legislation, a 1 year. Yeah. And what is always true is that while everybody likes a reduction in taxes, the increase in taxes that follows it, if it's not sustained, is always much harder on people than the extra money in the pocket in a particular year. You guys don't have any control over it. None of us sitting around this table have any control over it. That's the legislature. But in case anybody thinks this is great, we got an extra 50 cents in our pocket. Next year when they go collect it back, there will be those people in our communities that really have a hardship because of the tax going back up.
The bigger risk for us is that not so much that they increase the amount, the swept rate, but the whole harmless piece disappears. That's more likely to occur, and there'll be fewer screamers. We're the screamers. That'll be probably the course of action that may likely come out with. This is part of a step phase process. Well, we didn't have enough money in there to do that. So what we did is we kept the adequacy aid for those communities that absolutely needed it. And the rest of you are taking on a chip. Right. That's not their problem. That's our problem.
No, that's right.
Yeah, I was thinking probably if they wanted to reduce swept in 2024, they would need to have an idea of how the money's coming in, if they can afford it. But they probably have to do that pretty much this fall, right? Legislatively, they have to do it very quickly.
Not sure.
Or would they get it? But yeah, it would have to be a quick move on their part if they were going to do something.
Closing comment.
Yes.
Only in terms of your introductory remarks, speaking to it is a state revenue. It gets on the state books, but it never reaches a state checking account. And yes, the taxpayers certainly believe that it's a local tax because it came out of their local, and we do too. Because we're the ones that have to administer it. We're the ones that have to take the complaints. We're the ones that manage the abatements, by the way, granted legally. The state participates in no way, shape, or form, so it's totally funded by the communities and not the school districts also. So it's a local tax in our view.
Okay, and I probably should revise this document. I was kind of assuming what the school district might think theoretically, but now I've talked strictly to the focus group here, and I'll revise my document and just point that out, that it is locally managed. So yeah, it's that's important.
Because that's important, because that's the way the taxpayers see it.
Yep.
With the face of it.
Exactly. Any other questions from anyone online? Okay, well, thank you very much. Mark, we really appreciate the information and take it back to our communities. And I'm sure discuss it among ourselves as well. I do want to move along on the agenda here. We have legislative, first of all, the minutes review and approval. We do not have a total membership meeting set of minutes to review, so we're going to dispense with that and take it up at the next meeting of the entire membership. So I'm gonna skip item number 2 on our agenda. Item number 3 is legislative update.
Yeah. Thank you, Mr. Chairman. Does everyone in the room have a copy of kind of the bills update that I shared by email? I have extra copies here if anyone. Yeah, sure. Just those two. Everyone else good? Yeah, I got it right here. So this is just
Double these.
Yeah. Maybe I'll have Kath, if you want to just walk through what we did is just kind of break out some of the bills that we've been following, where they are in the process. Obviously, the session is over. The enrolled bills process takes time to, when bills are signed off by the legislature, they go through a vetting process before they get to the governor's desk. Some of the bills are still in that process, which can take a little bit of time before they get to his desk. Others, as we know, have been retained or re-referred, and we'll get further work over the summer and the fall. It'll create some of the basis for what we then look ahead to for next year, some of which will be, important for us. So, Kathy, you want to walk through this?
Let me just start. Does anyone have a specific question on a particular bill? You'll say, for example, I know that early on, it was someone had raised Senate Bill 95 as far as that's with meetings, remote, right to know. Exactly. So what happened is that Senator Gary Daniels had put that bill in. It passed the Senate, no problem. That's the House Judiciary. They had a real concern. Some members of House Judiciary that are involved in their towns don't like the remote meetings and felt that's not the way to go. So they refused to, they amended it. The Senate didn't like it. And they wanted a community conference. The House said, no, we don't think so. But what they did, in that Senate Bill 95, they took the section that addressed a commission to look at these remote meetings and they plugged it into House Bill 108. But House Bill 108, what was added to that was the language as far as the attorney-client privilege. That was a result, as you may recall, the Supreme Court case versus the town of Hampstead and SAU 55, I think, if I'm correct. Municipality, this was actually, that language was requested from the National Municipal Association, didn't particularly care what happened. I know the Attorney General's office spoke in support of that language being added to House Bill 108. So that's moving forward. It's part of the enrolled bill process. And if you're not familiar with that, it's quite, it's almost historical and institutional, where if the bill originated in the House, the speaker has to sign off. And it's timed, his signature, I think, Jim, and by the Secretary of State, then it goes to the Senate President for his signature again timed and everything. So they do that. So when it hits the governor's desk, he has 5 days to sign it, make the law without a signature or veto it. So that it's an interesting historical process. In that.
There's really no time limit. I mean, bills can sit on the desk of the speaker or the Senate President for some time. And
Yeah.
you see that they play with that timetable now and again, depending on what the bill is.
Right,
So.
right. And again, you'll see some of the bills, the Senate bills 130, 135, were, even though it's indicated they've been retained, they were added into the budget, the education freedom accounts, and of course, the calculation of the adequate education, which is the ADMA. And that was all plugged into the budget there. With that aside, I did pull out in a separate doc, well, it's probably going to be a document, I have a couple different ones, bills that were retained by the House and bills retained by the Senate. Now, some of them, like Senate Bill 130, 135, the Senate will probably make a recommendation when they come to session in January to, inexpedient to legislate, that it's been addressed, they don't need it. That's just my guess. But there's gonna see those that have been retained, we're gonna keep, they'll start, right now, the House is on break. There's no legislative activity from now through August 20th. Even though the Senate didn't put a specific timeline, they're not meeting. There are some commissions that are still, but not much as far as with any work being done on any of these bills being retained. Now, what caught my ear when Mark was speaking is that there was a bill that has been, that was referred in the Senate, and it's House Bill 110. And this was filed by the Deputy Speaker, Steve Smith from Charlestown. And it's relative to the distribution of adequate education grants. What he wanted to accomplish is that have the Department of Education distribute the grants directly to the municipalities. And then the municipalities would then forward it to the school districts. That passed the House along with, but the Senate won't, they referred it. So we'll see what they'll do. We'll keep a pulse on that. That, I don't know, but not to listen, maybe would that help humans, as far as tracking when it comes to the distribution to the schools and the formula? I'm still trying to get it all around my head, to be honest with you.
I think the final determination there was, if it's in the spreadsheet, it comes in as any other revenue to the school. But it's by community. So there's no need for it to come to the community if it comes in that way. So you have a
As long
total
as it
amount.
adjusts the district's bill to the community.
That's
fine.
right.
Right.
That's right. So you have a total amount for education. You have any of the other than tax revenue numbers, those get subtracted off, and you have an amount to be raised by taxes. Part of that's done by SWEP, part of it's done by local education. And as long as the hold harmless money goes into those revenue calculations, that gets subtracted off before DRA has the bottom line number, we're good to go.
But wouldn't this be more transparent to the general public if it goes through this way?
No, because we get those revenue, at least in our town, we get those revenue reports from DRA.
I'm not
And-
talking
and the school
about
district,
municipal government, I'm talking about the general public. If they saw it stated the way it was in this bill, that it was going directly to the community, would it make them feel better? That's all I'm asking, because transparency helps people accept things sometimes.
But at least in our community, we've been able to, the school district has been able to show them the sheet, show them where it got subtracted off.
Okay.
But it's broken down by community.
It's broken down by.
Right, if they throw this thing as just a general grant back to the school
Yeah,
districts,
that,
everyone's gonna get screwed in that deal.
but it didn't sound like that was gonna be the case.
As I was listening to this conversation, and it certainly seems like this is, from an administrative standpoint, they're trying to figure out how to implement the law that's been passed. And I sense some understanding here based on the concerns raised. And I guess, defer my colleagues here, but it may make sense as kind of part of a follow-up once we have a chance to digest this, to put our thoughts together and maybe share them with Commissioner Edelblut and just say, we appreciate the presentation at a recent meeting. There was a concern expressed about how this is going to be implemented, and we want to share our concerns. So from the leadership level of the department, he's aware of that and can be aligned hopefully with where we are on that issue.
Well, if you listen to what the initial part is, that they turn around and throw this thing into the school district, and if everybody gets, if it's a 5-member school district, then they're gonna get 1/5 of the cost, back to the cities and town, but that's not the way it works. Some, in our community, in our school district, you've got some getting, one's representing 31% of the budget, comes back, another one 7.64 hours, another one 4%, another one 18%, and so on. So it varies all over the place. So if they're gonna have this idea that they're gonna have a whole harmless part associated with the community, it's gotta be addressed in a separate column and to be forced back to that community. Because there are other parts of your billing that is done the same way. They turn around and send other towns, and we get 0.
Right, and
We have
so
lots
what
of
I,
zeros.
what I think we should do is monitor that spreadsheet. Make sure we get however we do that, whether it's by individual communities or as a group. And just make sure that the hold harmless column is being applied by town,
Right.
like they
Okay.
said.
Yeah.
But I'm concerned by what Jane brought up in the fact that swept is rate, excess swept is 30 million. And this hold harmless number is only 15 million. And I'm interested to see what that column is town by town for the hold harmless numbers.
Right.
Because that, it makes me think that we're not going to get any of that hold harmless. How can we? If it's only half of what we're putting into
I think
this.
the explanation was that even, this was the explanation.
Right.
At 263, or raising that lesser amount.
Yeah.
Some communities still have excess swept. So that 15, so I'm assuming 15 million worth, right?
Right.
And my understanding of the answer was that the remaining 15 million would pay the rest, but you're right, and this leads to the columns and the spreadsheets and monitoring, because that will really tell us what we need to know. And I had another question. Am I clear in understanding that this October 2021, nothing changes? It's the 363 as normal. It's the following fall when this is the one time, 1 year. Okay.
Yeah.
The problem with that is we're not gonna get that number until October 1st of 2022.
Yeah.
So you're gonna get that number on that date or somewhere close, to usually that late. So let's say you get it on the 10th, there's no time to react, because you set the tax rate the next week or two.
Right.
So there's no, we can scream all we want about it, but it's done.
And maybe in that letter to the commissioner, we can ask for that number earlier because.
Can't get it over because of.
They base it on numbers.
Well,
and
that's right.
You don't get the enrollments until the
Right.
1st of September,
Right.
and they're cramming it to get it ready in 30 days.
That's why they're late a lot.
Exactly, exactly.
Yeah, but to your point, Sean, about timing, that's why I'm thinking it makes sense sooner rather than later. And we flagged this issue today, so the folks that are implementing this at the granular level are aware now. We probably should let the leadership department know as well.
I spoke to them afterwards and they found this really helpful. And I think they really want to work with all of us. And I thought I'll certainly call them afterwards and say, thank you. And by the way, we'd really like to see how you're developing it, work with you on it.
We're
And
gonna
they
get a
said that-
lot of questions from our communities, and I don't see that either the school boards or our boards of selectmen or councils are gonna have any way to answer anything. And so we're gonna be putting budgets together and really have no clue what's going to happen.
As skeptical as I am to answer your question, Jane, I just ran a quick number. The 100,000 is about a 25% decrease. So 25% of 30 million is 7.5 million. Gee, we don't really know what it is, we'll double it.
Right.
15.
Right.
And I just know how these people are. And so 15 was the magic number just out of the hat.
So my understanding is right next year, basically, we're gonna see a reduction in swept, but no hold harmless. And then
Well,
the following year-
I think that that's going to be the effect in our communities.
Right.
Because I don't
And they're
see
saying
in
they're promising that to
2020,
be- And they're promising this is only.
2022, October of
This,
2020.
Not next year.
Yeah, next year.
Yeah,
So next year we'll have a drop.
no.
Well, we'll have a drop in our swept number, but I think for our communities,
Is that?
there isn't gonna be any additional revenue. That's why I want to see that column.
I'm just trying to see.
Because I think it's just gonna get transferred over to the local education piece. Right? So
If they heard us.
if it goes down 53 cents, you still need to raise whatever the budget is. I don't see that going anywhere except the local education.
Right, but that revenue anticipation though should reduce the burden, the tax
It,
levy.
it should, but I don't know that it can, given the numbers that they
Well, it
just.
depends on the proportionality, but I think as Nathan pointed out, if they do adhere to the distribution formula as they have done for any number of years, particularly in your cooperative school districts, there will be a separate sheet, town by town, giving you that allocation, and that should be applied directly to your town assessment from your school district. So that's the two things, you have to make sure the spreadsheet's right, so that it's equal to our home harmless, and that they're applying it at the school district level on that same proportional level,
Yeah.
not the school cooperative agreement funding
Well, I just,
distribution
for our communities though, the concerning thing, I think, is that 85 million of the 100 million is coming from adequacy grants, which don't apply to us. Right? Isn't that what it says? It says 85 million existing adequacy formula increases automatically. We don't get any of that money.
You get a credit equal to the adequacy.
What you raise.
Right. So.
I know, but in.
But we
in
raise
the
it on
tax
ourselves and we
rate,
don't get a
we
check
rate-
from the
That's
state
right, so it's
do that.
part of that $1.83. So if they reduce the $1.83 to $1.30,
In
it doesn't in
2023.
2022, October of 22.
Right.
Right,
Yes,
for
yeah.
fiscal year 23. So where is that 53 cents for us as excess swept towns? Where is that money going to come from?
It depends if that 50-cent decrease from 182 to 130.
130, whatever.
Let's say just 50 cents. for the
Yeah,
sake of
50
argument.
cents.
If that 50-cent decrease dropped your SWEP below your adequacy, there are probably some towns who are currently above their adequacy. It might drop below. They're gonna get part of that 85
I
million.
understand that.
If you're even at that 50-cent decrease at 132, you're still raising more money in SWEP than your adequacy, then you're not harmed. You're gonna be held harmless from the other provisions.
But
But you never really got to see that in the
Except-
first
wait a minute,
place.
Wait a minute, so our total school budget.
Yep.
$1.83, but the total number that the school needs to operate is $2, right? Then I would have $1.83 under state education portion of the rate,
Yeah.
and I'd have 17 cents under the local portion,
Right.
right? School number stays the same in October of 22. They dropped the SWEP to $1.30. My school number I didn't get any additional
Exactly,
money.
you make it up. in
All right.
Yes,
it's
you
going
did.
to go
But
to
your
that
whole
local
harmless
portion.
is going to give you the extra 50 cents.
If you have a hold.
For that one.
If you have a hold harmless, that's my thing
Right.
though, with 15 million being their calculation. How do they make up that $30 million that we're currently
Well, that's their
raising?
fault. They have to figure that out.
Their argument
So
is the
it's-
other
it's
parts of the pie
great
check.
To
Their
say that
argument
we're
is
gonna get a 50-cent reduction in SWEP. But what we pay is, for our local education, is we pay the SWEP amount plus local education.
That's
tax,
right.
Okay, so if the amount that it takes to run the schools isn't gonna go down, and unless we change the structural requirements and the administrative structures of the schools, why is it gonna go down, right?
But what I heard them say is that 50-cent reduction in SWEP is going to be given back to you in a hold harmless, and you're still only raising 17 cents like you did
And,
before.
and if that's the
So
case.
if that's the
then-
case,
then
that's great, as long as,
But-
as long as it.
Trust but verify.
Yeah.
Yeah, right, and that's
Right.
my only concern, and that's why that spreadsheet is so key,
Yeah.
I think.
And that's why I asked him the question at the beginning, where the money was coming from.
Right.
The education trust fund, as I understood it, or the general fund. But, and when I talked to them yesterday, day before, it was very clear. I kept saying, you sure? So if you raise $6 million in SWAP, but now with this $100 million decrease, you're raising 4, where's that 2 coming from? And you're still gonna be 6, but your adequacy, you only need 2 to fund. They said, oh no, the state's gonna pay you the 2.
Yeah,
They're basing it on the funding of the grant is gonna be because the other parts of the pie are gonna increase.
Are gonna grow 100
And
million.
but that's
Right. I
gonna
think-
push the money back into the education trust.
well, as
fund. Pray to
long,
God.
as, that's right, as long, I think if we're gonna send anything to leadership, I think that needs to be very clearly stated that we're still not really clear. If we're raising 30 million and you're saying that there's 15 million in hold harmless, that's not computing. Because
I'll call-
that's,
Yeah.
you know, and whether or not the adequacy is gonna, how is the adequacy really going to cover it is, I think, the issue.
The other question is, we may go back to them and ask it, you asked them the question. But I guess we're not really clear that what the answer is.
I think their answer was that even with the reduction, there is excess swept.
Yeah.
And that offset, I'm assuming
Okay.
50 million worth,
Right.
right?
Yeah.
Bigger than in the, basically, and
Okay.
then they have 15 million in the hold harmless that would supplement the rest. And that's how I interpreted the answer.
Right.
And
Yeah.
then, but,
One of the dangers is that they won't say that you're having any problem, because even though your excess grant went down, excess went down, you still have excess swept.
Right.
So how have you been harmed? Depends
Gotta
on how
see
they
that
define that.
spreadsheet.
if I could segue very quickly on that, the Conville litigation, there's just been some deadlines set for that, just for our general information. And so discovery is going to end August of 2022. The trial is set for January 2023, and it's a 2-week trial. So right about the time we have our tax relief for 2023, the litigation will move forward in the Conville matter, just for everyone's information.
Well, theoretically, nothing ever goes on schedule. Nothing. I've never heard of a trial that's actually on the schedule
Right,
date
right.
occur. So it's sometime in 23.
And then it'll take
Maybe.
months for the decision, and
Right.
then I would be surprised if there wasn't, no matter who, no matter how,
An
the-
appeal.
no matter what the decision is.
Will be in the next
I'd be
meeting.
surprised, I'd be surprised if there was an appeal, so.
Just, I wanted to go back to the bills real quickly. You know, Kath had flagged House Bill 110, which passed the House, Senate's referred. So jumping back to the question about, I think is what you were getting at, Kath, about where the funding goes and the concern over that, and whether they can handle it administratively, perhaps, was further fine tuning with them. But, you know, Kath, I wonder if you're looking at this bill and thinking whether there's maybe a way to do a fix in here that maybe addresses our concern.
Yeah, I think what I'm walking away today, what's sticking in my head is this whole harmless grant. So if hypothetically, and much can happen, of course, that next year's an election cycle, and then there'll be the budget following year. What if they don't continue the reduction swept? Okay, whatever, I'm still trying to head on that, but what's sticking out to me is this whole harmless. That could be more critical, I think, at the end of the day. So how can we, looking at 110, Steve Smith is the deputy speaker, he said, I've worked with him on some other matters, he's very approachable. How can this, to address your concerns and to the transparency and to make sure, especially with the cooperative districts, how, I mean, it could be worth a conversation with them and say, look, how do we, move this forward, and then speak with Senator Hennessy on the other side, and say, look, this is all great, but here's what we learned. And through these discussions, this will harmless, checks and balances, transparency, she got cooperative school district. Trying to.
It's just an existing vehicle that we
Right.
may be able to
That might-
talk with them about
yeah.
and.
Well, and Steve Smith, who's the sponsor, I think.
Yes,
of this
yes,
bill,
he is.
Is the one who came up with this whole idea of reducing SWAC. This is his baby. And as I understand it, the reason he came up with it was he didn't want, and this is no offense meant, but he didn't want to just reduce the number and give it to the municipalities of the school district. He wanted it to go to the taxpayers, which is why what he did is he did it on the state education funding side because it directly went to the taxpayer. So I know. I hear you.
Not really.
I was telling you what I was told.
And that's
That
the-
pocket.
And that's,
You want to see it's all fungible, so, whatever.
and that's what's
But-
touted in the media, that's what they're saying, right?
Yes, yes.
And so that's what I couldn't get my head around, like, okay, as a taxpayer.
Well, I'm glad to hear the the whole harmless did get through, because that was our primary concern.
Right,
without
right,
it.
right.
Both the whole harmless and the $100 million reduction are for 1 year, so they expire.
Right.
So to whoever's point was, there's going to be sticker shock the following year,
And maybe that's-
because the 100 million is back in, and there's no hold harmless.
But sometimes with these things, the only way you can get it done is you do it once, and then it becomes easier going forward to.
Because it's
to
hard
carry
to
it
take
forward.
it away.
You can't do it for legislatively, it can't get done forever in one step. It can get done as a foot in the door, and I'm guessing that's where they're at.
And
But-
back to the issue about where the money goes with the cooperative school districts. I did speak to him outside and the language that is in the law, it is a little bit, to me, as a non-lawyer, ambiguous. And they said, this, you can read this a number of different ways, because you heard the guy from DRA reading it a little bit differently. So they're gonna go back and do some work, but it may be, depending on where they come out on this, and it might make sense to clarify that language in 110. That would say to me, that might make sense, and I would, at 110.
198.
No, House Bill.
Oh, you mean it's.
House Bill.
Yeah, I thought we took the retain bill
Yeah.
that's Steve Smith's bill.
Right.
And I think he would
That's
probably.
directly on point.
Yeah,
Right.
so,
Yes.
Well, there's a
I think he-
schizophrenia going on, as
Yeah.
noted
Right.
here. It's a state tax, it's a state revenue, it's a state this and a state that. Oh,
Yeah.
but when we
Right.
give the grant, it's a school district
right,
Yeah.
money,
Right.
and SWEP is a municipal collection problem,
right,
and we wash our hands of it.
right.
And I
So-
think Steve Smith would be very receptive to this conversation, don't you, Kathy?
I agree, and whereas in some education, definitely outreach to Senator Erin Hennessy.
Yeah.
She's your senator, am I correct? Yeah, so that'd be something we say, look,
Well, and if not, we've got things we could do in house education. And Steve Smith certainly, if he
Sure.
agreed, we could certainly
we
do
can
it,
also.
do it that way as well.
I mean, with that said too, let me just continue that theme. So house deadlines, and I think I included that, it's up on your update, but September 13th is the first day for them to file a legislative service request, LSRs, and September 17th is the last day on the House side. The Senate side is a little different. The Senate, the first day is October 13th, the last day is October 27th. I mean, also too, there have been bills that are retained in the House and they have to report out by November 18th, that's on the House side. If there's some work, something to look at, I mean, we can work, again, once we get our head around, what do we need to address to begin going forward that, like you said, this could be maybe something, a small start and it can continue. But what if it doesn't continue, I'm walking away today going, well, that whole harmless is important.
Yeah.
I guess my point would be, just to kind of clarify what we're talking about, which is if we become convinced in the near term that administratively, the department's not gonna be where we might want them to be, right? We do have an opportunity to, either work with an existing bill that we're talking about or bring a bill forward for next year.
Right, so working forward from this meeting, then, we should put together a draft of a letter and circulate it. Or have the joint board get together and review it however we want to do it. But I would like to get a draft started so that we can start discussing that. And then decide how we're gonna handle these retained bills as a group and approach them. And maybe come up with talking points or something that we could distribute to the communities so that they could talk to their legislators going in before the LSR period comes up. Because we also want to try to prevent legislation from getting proposed that's going to be difficult for us going forward, right?
To clarify, will DOE and or DRA, will they just come out with technical bulletins on how they're going to administer this law, or will there actually be a rule that will have to go before the legislative?
It's interesting you say that, because my note to myself was about the rules, and we have to go back and look, but they clearly heard the message and they had thought of it. They thought this was a great session because they got good input from you all. So I think we can work with them, and the question is whether they could do the money in the cooperative districts going to the municipality instead of the schools, whether they can do that rule or not. or somehow, wherever we decide, whatever we decide is the best outcome, whether they can do that rule, which would be
We have,
better.
may have multiple battlefields.
Yeah.
There may be parallel tracks here.
Tracks, right.
Yeah, exactly.
Well,
I mean,
One
from my
one
perspective-
advantage that I'm aware of with, from the school district's perspective of the money going to them. And it's, and from my perspective as a community, as long as it's allocated to my community. We do have some communities in our school district who have withheld payments in the past because, oh, you know, we're short on money, yada, yada, yada. And so if the money goes to that community, it doesn't help the school keep funding things. So I'm not against it going directly to the school district, as long as it's applied to the community and not just spread across everybody. Because as I said earlier, the reality in our district is that we have 2 of the 6 towns carry the bulk of the cost. And we're the excess stub towns.
Yeah.
And the way our formula works, we provide most of the funding for the district. So the other 4 towns that are poorer towns, their education tax rate is much higher because their tax base is so much lower. And it's more of a burden on them, but they also happen to have most of the students. So,
Yep.
One of the things I wanted to mention too, and about 2 bills, one is House Bill 242, and that's the content of an adequate education. And the other bill that was retained was 608. 608 is the one that tracks the Convale case that really expands what we are going to fund as a state. And that is retained. And that could really change the numbers of what's required for the base adequacy and all of that. I'm not as familiar with 242 as far as what was the concept of that bill and how that might change the adequacy calculation. I'm just raising that because it's a funny thing.
Good question, and I know you have other national interests, but real quick, it ended not the way it began. So
Okay,
what caught
okay.
my eye on it, and I mentioned to Jim and Teresa, was that it was at the committee conference. So basically, it started out as far as what should be included in an adequate education, topics, science, et cetera,
Right.
climate change. What was added, and this was sensitive to Senator Erin Hennessy, was as far as where districts that have special educational needs, English language proficiencies that are economically disadvantaged. So basically, as we've learned about base costs, or I've learned base costs, so I'm still learning, is that this, what will provide that those issues such as special educational needs will be the differentiated aid. So part of the handout that Mark said, you have that.
So it's a
first
carve
when I-
out in a separate fund
Exactly,
for this
Jen, yeah.
differentiated aid.
When I was at the committee conference for this, just to, and I was like, oh, just learning is like, how is this all gonna impact the adequacy? I'm like, oh, okay. But then it's learning, okay, it's separate. It'll be the, yeah, so, exactly. And that's an enrolled bill, so that's.
So
moving
that will be
forward.
signed, and then the one
Yes.
to watch is the 608. That's
Correct.
been-
And again, that's Representative Steve Smith. So I think we might be getting to know him a little bit better. So.
Okay, well, we are over here by quite a bit, so I do want to wrap it up. I did want to tell the group that financially, our bills, the invoices for the first year are in the mail. They were sent yesterday afternoon or this morning. So those are out. We have $81,000 in the account, which was the transfer amount from the previous group to our group. We have, all the bills are paid as of the end of June, all of our existing bills. We do have some expenditures for website development and things like that that we will have to, the joint board will have to discuss going forward. But right now we have a little over $69,000 in the account after all of the bills are paid. And we have invoices out for about 66,000. So we'll have a good balance going forward. So I just want to please, Jane, let the finance department in the city of Portsmouth know, thank you from our group. Judy and Helen have done a great job getting this finalized. They were in the middle of their year end and that sort of thing. So it's been a rough June for them, but they do have everything out now.
I will let him know.
All right, and we will distribute, as soon as they give me the June financials, I will get them out to the group. All right,
Motion to adjourn.
yeah, we have a motion to adjourn and seconded, so we will adjourn. We will set up a joint board meeting in the next few weeks to get caught up on the letter and get an update on legislation. Thank you for your time. Thank you for those who joined online. Appreciate it.
Live?
Yes. Yeah, and we'll figure out what we gotta do live going forward.
Yeah.
If you have some extra copies of the bills, I'd like to get a couple of them just to distribute to other board members.
Sure. Of the
bills that we just.
actual bill, sure. Yeah, we'll.
I have it on, we have it on the computer, but I thought if I put it in their hands, they might actually read it.
We'll pull that for you.
I'm sorry, that didn't sound nice, but you know what I meant.
Uh-huh.
Yes.
Well, I
Pleasure. Safe travels back.
They were going to give us the $85 million anyway. It's the increase in adequacy. That was there anyway.
I may see you on Saturday.
I will look forward to it.
Yeah.
Can I get a couple of them? The other two board members in our town.
So all I have is a memo, and I can send you the bills we'll talk about as well.
I've got it, and it's already been posted on our website, when you sent me that stuff, and immediately.
Oh, beautiful. Good.
So, well,
Okay, very
thank
good.
you so much.
Thank you.
Yeah.
$5 million more.
I know.
They even say it. It's what was going to come to us anyway. So for our communities, this is nothing unless there's excess sweat. And it doesn't apply to our entire group. It probably applies to less than half, I guess. I mean, until we get the spreadsheet. we
Until
don't
we
know.
get the spreadsheet.
Did,
85% of this.
Oh, that's
tax
Julie.
was coming anyway.
Is she still, that's Julie, I think that's Julie's jacket, did she forget it?
Oh,
is she?
There she is.
It was raining and it was in the back of the car from when I've been picking up feed.
Yes. It points out how we
This was an emergency grab,
That concept is.
thought, did you remember the news, there's a focus group, this is the.
Yeah, focus group.
This is the first presentation they've done.
Yeah.
And so they were.
Unless we prevail.
Listen to the conversation, so I think we'll see where.
The concern is that it kind of felt like they never set a tax rate before.
Well, Bruce
It's
isn't the
complicated.
best guy from DRA.
No.
to be
No,
here. It
no,
should have
no,
been,
no.
it should have been
Oh, he wouldn't
the head
come,
of.
he wouldn't come.
Should have been.
He's not the easiest.
Mr. Garrett.
Right, no, that's who we wanted.
Well, I can talk to him because we're on the municipal bond bank.
Right, right.
No,
And I'll-
it was interesting, because I called originally the assistant commissioner.
Yeah.
And said, well, could we, do this? Well, we haven't presented to the Muni Association yet. And so she wanted to talk to him,
Yeah.
to James. And I never heard him back. And I thought, it's interesting. Okay, so I'm gonna go to DOA. And I called Caitlin Davis, who's on vacation, so I got Mark. He said, well, I'm actually the one doing this stuff. This would be really good for me, and this is good. I'll get my counterpart. And I said, James, and he said, he called me back, because that's who he was getting
Yeah.
originally calling back. And he said, he's not coming. He wants, what's his name? Bruce. And I thought, okay, all right. I mean, I kind of got the feeling there was a little bit of avoidance there.
Well,
Right.
it's also.
It's hard
you
when they're
gotta
put on
have-
the spot.
it is
something
only-
that's new.
8 days after the
You
session.
know,
and
and then to do a presentation on the implications of it when you probably haven't run the numbers or
Right.
any.
Well,
sort of-
exactly.
They're still
Process.
trying
Yeah,
to.
But I
right,
think
so
they
got it,
thought
yeah.
that, because they haven't done muni association, they haven't done school, they haven't done
Right.
anybody, so we were a good trial on
Yeah.
it.
Right,
Came up with
and
lots
it's
to
an
think about.
evolving.
Yeah.
And I think we can go back to them and say, okay, we want to see what you're coming up with now, and this is what we suggest.
And I think it's also good for them to understand the community association is not necessarily monolithic.
Well,
Right.
and it's, well, but they're purposely, the municipal association is
They
gonna say,
don't
thank you
do-
very much, but they don't want to.
Send it to the school boards association.
So
We don't want
that's
to get
why we
involved.
have our group, because the
Right.
municipal
That's right.
association won't represent us
Right.
because
They
No, you're
can't.
right.
most of their membership benefits from this, so.
Mhm.
Oh, yeah, yeah, no, you're
It's
exactly
true.
right. So I thought it was good, I think you
Yeah.
gave.
No,
a
that was
great
really
feedback.
helpful. I mean,
I
to
just-
have it.
I don't
Have it
think we
presented.
said to them, and I think we need to say to them about that $85 million coming from adequacy. That's not a tax cut when you come right down to it, because that was coming to us no matter. It's a $15 million
It's
tax cut.
stages because it's a cut and sweat.
Well, from the state perspective, it is, but
It's a
when you look
state
at our,
tax
when
cut.
you, but when you tell taxpayers
Right.
that, it's not going to, because the next year,
Yeah.
Well, will it be even be evaporated by the next year?
well, it'll depend on census and
Yeah.
everything else.
Yeah.
And on business profits taxes and
So
everything
they really
got
got a
So,
$15 million tax.
You got a
cut
$15
going.
million
Yeah,
tax
but
cut for 1 year.
it's very
is what
clever
you-
how they did it.
Oh,
It's very
absolutely, they
clever.
made it look
All
like
all it will
100.
take is another
There was-
gunshot across the Middle
Yeah.
East or some
Exactly.
other pandemic
Exactly.
explosion